Saturday, October 9th, 2021, and welcome to the Capital Allocation channel. Today I want to go over a technical analysis of Monero, Pirate Chain, and Dero, as well as give you some thoughts on why I think these technologies are going to be so important going into the future. So first, before I get into the technical analysis, I want to go into this clip of Catherine Austin Fitts.
But here's what you need to understand. The Western democracies in the United States have been run with a two-pronged financial system. On one side, you have private banks with the central bank, the Federal Reserve, who are managing monetary policy. On the other side of the house, you have an electorate voting for representatives who manage the tax flow and the credits that relate to that, so the treasury market. So you have this balance of power between the people and the bankers. And now what is happening under the guise of COVID-19 is the bankers have decided they no longer want to share power with the electorate or the people's representatives. And whether through FASB 56 or levering the governments up so they're deeply in debt and dependent on the central banks have decided essentially to take over. And the ultimate sort of completion of this will be when they introduce digital currencies controlled and operated by the central bank. Why is that important? Because they won't be currencies, Del. They will be a financial control system.
All right, and with that introduction, let's get straight into the technical analysis. First, let's look at Monero. So Monero formed a head and shoulders pattern. Here we formed that left shoulder. This head here formed a double top, came down, formed that right shoulder, broke down, made a higher low, and pushed up past this key $262 level. If you look here on this last candle that formed on the daily, it's forming a gravestone doji. So essentially, buyers came in, got rejected, and the candle is then closing back near the opening. This is a very bearish candle. However, we still are holding above this $272 level. We could consolidate around this level and go higher, but if we break down below this level, this is a very bearish indicator. Here on the TradingView technical indicator, it is still suggesting that Monero is a buy. So let's look at Pirate Chain. Pirate Chain has been in a downtrend for a while. We came up, formed a fake break really through this $2.63 level, and now we're coming back down. Had huge volume here, but we could be trending down and retesting this level around $2 to $2.10. As long as we can hold that level, we're still okay. If we break that level, again, very bearish symbol. Here, the TradingView technical indicator is saying that Pirate Chain is in fact a strong sell at this point. On to Dero. Dero has had an amazing run. It's been trending up and down within this channel here. Here we didn't really get time to rest and go test the bottom of that channel. We're extending straight up past the top of this top channel here. This last candle on the daily is in the positive here. If we can break above that $26 level, we should be going higher, potentially with an exponential type of pattern here. The TradingView indicator is saying this is still a buy. However, there's always the chance we could break down and start trending lower. For me, this is a little difficult one. This one's really extended, and as I always say, I like to sleep at night, so I don't like to hold these things when they're this extended, and especially if you're just getting into a trade now and you don't know if you're going to wake up and have huge gains and huge losses. So just be aware of that. I hope the people who were in this are making amazing gains. And before I sign out, I want to cut to another clip just to give you guys my thoughts on why I think these are so important going into the future.
Analysis on CBDC, in particular for the use of general use, we tend to establish the equivalence with cash. And there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that. Those two issues are extremely important, and that makes a huge difference with respect to what cash is.
All right, so I hear what
So-
sounds like controlling the finances, but give me
So
the
this is
lowdown.
what this means. You will no longer have a currency. You will have a credit at the company's store. If they don't want you traveling more than 5 miles from your home, your credit card, your bank account won't work more than 5 miles from your home. If they don't want you, let's say they decided you shouldn't be able to buy pizza, you can't buy pizza. You're talking about complete control, at a very intimate level of both surveillance, because remember, there's no privacy. They'll be able to track every transaction you make. So we're talking about a credit at the company store and literally a slavery system.
So with that, my personal strategy is to reduce my dependence on the monetary system as much as possible through the use of cash, privacy coins, as well as physical gold, silver, and platinum to transact in the real economy. I appreciate everyone watching. I hope you have a great day, and I will see you in the next one.